An Africa that's focused on the things that are affecting her people. I see Africa going global, making her mark on the world stage. I see Africa's innovation, showing excellence in all she does. I see Africa getting...
We can prepare to get started. I'll introduce the two individuals representing the fund managers of the fund. The fund is managed by IC Asset Managers Ghana Limited. And on the call, we have Ubed Udente, who's our main fund manager. He's a portfolio manager and has been with IC for over 6 years. And we also have Herbert Dinchi, who's also the portfolio manager on the fixed income side. We will likely have joining the call Isaac Boama, who's our Chief Investment Officer for IC Asset Managers Ghana Limited. And their supporting team is also on the call whilst we get started. So just in terms of housekeeping rules, we have a few questions that we prepared for our fund managers to help us with answers to. Hopefully that will speak to the basics that the basic questions that most of us will have at the back of our minds. And then the point of this has been to give the investors in the fund the opportunity to ask their questions, to get answers to their questions. So the aim is to have at least half of the time. So we'll spend at 30, maybe 40 minutes on prepared questions, and then the rest of the time is yours to ask your questions, to get your answers. So I would say we'll use our hand raises, we'll use the chat box if you feel you'd rather write, and that way hopefully we'll get through as many questions as possible. All right. So thank you all again for joining, and I think we can get started to the substantive issues at hand. So I think, Obed, we have you on the call. Hi, Obed.
Hi, Dora.
Great. So hopefully I'm able to hear Obed. We can all hear Obed. Great. So it's been a tough year. I think, yeah, we've been challenged on many fronts especially in the last 3 or 4 months. We've been, hit hard on many fronts. So the Ghana economy has faced some turbulent times. Maybe we can start with what lessons as a portfolio manager we've learned, and you can maybe tell us a bit about how you chose to secure the portfolio so that we don't get hit too hard by all these shocks.
Very well. Thank you very much, Dora. And a good afternoon to our cherished investors. I think this is a very great platform to interact and also share our views and also let you know what we are doing with respect to your funds. Indeed, 2022 was a very tough year. We could all appreciate the fact that the various headwinds that actually affected our purchasing power as individuals, that actually drill down value of various portfolios that we have investments in. I think we're quite a painful year. A few people have lost value of some investment that they have made. But through it all, we've been able to manage our way through. And I would say Q4 has been one of the toughest. If you look at the last quarter of last year, if you look at exchange rates, the exchange rate alone, the CD did about a little over 40% in terms of depreciation at some point before it actually improved getting to the end of the year. When we look at the year entirely 2022, we are looking at over 60% depreciation of our currency. And this actually affected a lot of things. One thing that I believe is a lesson to everyone on this call, is that the exchange rate affected each and everyone's purchasing power. So when we look at the quantum of goods or products we can buy with a certain amount, you go to the market, you're not able to buy the same quantum of stuffs with the same cash or money that you have. So it was a really painful experience, but I believe very interesting lessons have been learned. Now, for us as portfolio managers, yes, our portfolios in one way or the other also were exposed to some of these risk factors, talking about exchange rate depreciation, talking about inflation, which were the two key issues that we all actually experienced. So for our portfolio, precisely the IC Liquidity Fund, I will say that we were very defensive. And I think on our previous call, we clearly indicated that as fund managers, in times like this, yes, it's good to get the best return for clients, but one key thing is to make sure that there's some preservation of capital. And it's very important that to make sure that the instruments that we invest funds in are pretty much safe and wouldn't lead to any pain point for investors. So what we actually did was to try as much as possible to stay away from assets that are highly exposed to interest rate risk, because in an environment where inflation is going up, definitely interest rates will be going up, and the adverse effect on returns is that returns will be going down. So we may have people who have investment in fixed income securities that are not churning out negative returns, mainly because of the exchange rate risk. So what we did as fund managers for ICLF is to try as much as possible to stay away from securities that have this interest rate risk. So yes, you may see in our portfolio things like ripples. So those were some of the structures we put in place. So instead of getting ourselves fully exposed to interest rate securities like Government of Ghana securities, not even to talk about this whole issue about debt exchange, but even looking at interest rate risk alone, we tried as much as possible not to be directly exposed to Government of Ghana securities, even though you see Government of Ghana securities as sort of the underlying securities for some of the repos that we did, but we're not directly exposed to government. So you can see that in spite of all that is happening, we have tried our best to keep the portfolio in a positive return, given the fact that interest rate risk is king. So in simple terms, we try to manage our interest rate risk quite well, as well as credit risk. If you look at our prospectus, there are a number of securities that as fund managers we could invest in. But as much as possible, we try to be flexible with our investment strategy just to make sure that we do not necessarily have to limit ourselves to those securities, but then explore other options that still fall within the scope of the securities that we can invest in, i.e. investing in repurchasing agreements that already have some sort of interest rate risk hedge in that. So these were some of the ways that we actually ran the fund last year. And I think everyone on this call that has invested in the fund is happy, because despite the fact that in recent times we have seen that the return on the fund has declined a bit, at least we can all see growth in our investments. And the decline we've seen is not because we are recording losses, but it's mainly because we are employing very safe investment strategies and not to become too much aggressive in going into high yielding risky investments. Thank you.
All right. Thank you so much, Obed, for that background. So essentially, you're telling us that although, for instance, the fund would have been making in excess of 35%, what we are doing as fund managers is to ensure that there's safety to the return that we are currently getting, so that if people need their money, they can actually still get it at very short notice. Great. So Thank you for that. Herbert, I see your camera is on. The next question comes to you. So in light of the ongoing financial crisis that we are experiencing as a country, what immediate concerns do you have in regards to the fund? Sorry, Herbert, I think you're on mute. So if you could take that again.
Oh, sorry about that.
There we go.
Good afternoon, everyone. So with regards to biggest concern about the fund, I think Obed has already touched on that. We discussed as a team, and for us, our biggest concern is obviously returns. So since the inception of the fund, and again, bearing in mind that we launched the fund in a high interest environment, we saw the fund deliver returns of 25%, 30% plus as yields creep higher. But then now the concern is the drag on returns, looking at the extremely defensive strategy that we're employing. So that's the biggest concern we see, i.e. trying to make sure that we are still delivering the competitive returns in the long run. But then again, our priority as fund managers is to ensure that the funds of every single investor is safe. So that's our priority for now, and less about chasing returns. And so we expect returns to drag on the fund in the coming months, as and when all of this eventually clears up because of the extremely defensive position that we're taking for the fund. So that's the biggest concern that we see. And obviously we have to also communicate to investors as well, so they understand what's really happening. And like Obed has also pointed out, it's not really about negative returns, but it's just the fact that at this point we are extremely cautious, and we want to make sure that in a worst case scenario, at least you still have access to your funds, or you can still redeem your funds if you need it. So that's the biggest concern that I think I could highlight for the fund right now.
All right, excellent. So biggest concern is still trying to get decent returns whilst they're staying safe. Fair enough.
Correct.
The next question was going to be, how do we mitigate these risks? But I think you've already touched on that. Are there any other risks that we should be looking at as or we should be thinking about as investors in the fund? I know, we've talked about interest rate as one. Is there any concern with credit or default? Is there any concern with FX? And maybe how can we, or like I said, currency instead of saying FX, how can we mitigate these?
Okay, so with regards to default risk, we did mention that we are executing short-term repos to manage, liquidity and also generate decent returns. Now, with regards to the repos, the underlying security is treasury bills. And someone would ask, what happens if the government decides that treasury bills are also included in the whole exchange program? But then with repos, the risk here is counterparty. So the risk sits with the counterparty. And in a worst case scenario where treasury bills are included in the exchange, the counterparty is still obliged to repay as a fund. So with regards to repos and the fact that the underlying security is still a treasury bill, which bears some level of risk considering the current circumstances we find ourselves in, the risk is still counterparty. And so in a worst case scenario, we would have the counterparty, which is whichever bank we are placing the repos with, still be obligated to pay back the fund plus the interest that is due or owed to the fund. In terms of other risk, obviously there's going to be the risk of inflation and FX. So with inflation, we see inflation now at 50 plus % levels, and then you juxtapose that with the returns that the fund is generating. There's probably a big or wide gap, but we are thinking long term here, and then we are also trying to be considerate of the fact that we still want all investors to have access to their funds if really everything goes bad or if the worst really happens. So that's a risk that faces the fund currently, looking at the gap at where inflation is and where returns are going to be in the coming months. But then again, we are still making sure that we are balancing the returns objective with the safety preservation of the fund to try and make sure at least we are beating the benchmark that has been stipulated in the prospectus. With regards to FX, the fund is denominated in CD, so there's still an element of FX risk. But at the moment, we are not exploring any alternatives or options to show the fund when it comes to FX, mainly because we are constrained by what's in the prospectus. But it's something that maybe in the future we would definitely look at. But I think the most important thing is we need to survive this. That's at least from my personal view and from the team's point of view. We just need to survive this moment, and then once that is done and dusted, we can figure out ways to look at how to generate returns that are back to the levels that investors saw 6, 5, 4 months ago. So those are like the risks that I think I could highlight and what we are thinking around them.
Excellent. Thank you so much for that thorough explanation. So, Obed, I think for you, I'd like to ask your plan for the next 3 months. That's our main focus. And if you can go beyond that, obviously, we'll be very grateful. But what's the plan to look after the fund?
Very well, okay. So I think we still find ourselves in a situation that where there seems to be a lot of uncertainty with respect to the investment landscape domestically. So the strategy would be basically to roll over what we're doing at the latter part of 2022, especially for the first half of this year, talking about the next 3 months. I think you did mention about the risk of default, which is something that is looking into our face, especially when it comes to government of Ghana securities at the moment. So while we have all of this still happening, there's some level of uncertainty even with respect to the market. So this is not a time to rush to change strategies. This is a time to keep calm, to really understand what is happening and what will be the finality of government debt exchange program, issues concerning the sustainability of government debt levels and all that. So these are all issues that are very critical when it comes to decision making with respect to the fund. So for the next 3 months, we'll probably keep it safe. We'll probably continue to explore opportunities within the repo. That's the repurchase agreement, until we have some clarity with respect to government debt exchange program, and then we know which securities will finally be exchanged, which class of investors will be included and excluded. So these are all things that are very critical when it comes to decision making. Despite the fact that we have a lot of tools that we can employ to actually improve and drive returns to meet clients' expectations, this is not the time to rush with the tools that we have available to us. So what I'll say is that for the next 3 months, we'll roll over the strategy that we have put in place, which we believe investors have confidence in. And that is why they are still keeping their funds with us, because their funds have been safe. As when people need to redeem from the fund, they get their cash. We've not recorded any issues yet with respect to clients redeeming their monies, which means they're happy with the strategy that we are employing. So yes, for the next 3 months, we'll keep things safe. We'll play it in such a way that we will be happy. We'll all have liquidity like we have promised investors. And then beyond that, when all is done and dusted concerning our digital exchange program and the grounds is quite clear to play, then yes, we'll put in or we employ further tools to beef up the returns for clients. So for now, we'll keep it safe.
That is, I'm sure, very reassuring to the majority of our clients, especially those on the call. So at this point, I think we should open this up for questions. So like I mentioned, if we can use the hand raises or if we can use the chat box, I'll be monitoring those. So if there's any questions that our clients have, I'll be happy to take them. Okay, thank you. Nayamuli, thank you for joining. I see your hand is up. Please go ahead.
Okay, hi. I think my main concern is with fluctuation of the rates and the investments, because Dora, you would appreciate I just did an investment and then the rate was about 30. Now my concern is when it changes, right? Because it used to be around 20 something and then it went up to 30. Is it are you tying it to the treasury bill rate? My other question is also a loss I realized on my investment on the dashboard some time ago. I think Dora, you do a good job. I raised it with you. I don't think I'm still convinced on why that significant loss happened, and I would want an explanation on what are probably the causative factors to such losses on our investments.
Okay, thank you. So with regards to your first question on the rates and how they are not stable, and actually it sort of answers the second one as well. Essentially, the fund is marked to market, which means that every day we get a view from primarily the banks and other brokers that we typically do trades with to see what they would buy our portfolio at. And that is what is translated into the price that you see. And so if, for instance, we purchase a security today for, let's say, price of 10 and tomorrow it's price of 12, that translates into the price as an increase in price. So if you sold that day, you will get your value up by that amount. If the next day it's 11, the price will be adjusted adequately. And so you'll see that if your 10 CDs went to 12 CDs and tomorrow it's 11, you'll be able to redeem at 11. Now, what our fund managers are trying to optimize is that if the price goes, if they buy something, they buy it at a fair price, hopefully cheaply, but at least at a fair price, so that on the following day, if the price goes, if we go back to the market and ask what people would buy it at, it's at least just based on the time value of money, you're getting something more. In one or two instances, it has happened that when we've gone back to the market, and especially with all the volatility that's happening, when we've gone back to the market, the price was actually less. And that's why you'll see that drop on your portfolio. But all things being equal, the number of lost days that we've had are rather insignificant compared to the trend, the extent or the history of the fund. And so should you keep your money in the fund even for a week, it's highly unlikely that you'll see a loss. So what you are picking on is that one day where the price went down. But over time, you'll see that it does trend on the up because of the prudent management that is happening on the fund. So I'm hoping that answers the questions. And I'm sure if people want to know the mechanics, we'll probably have to do a separate section going into the pricing.
Adora,
but it's based on the market price.
When you talk about sale, right, are you talking about sale by IC? Because I'm not sure.
Sorry, when I talk about sale, I mean when you request to withdraw. So when you request to withdraw,
there wasn't any request for withdrawal. I just saw the downside on my account. There wasn't any request to withdraw.
Yes, that's because of the pricing. So every day we have to tell you what you would get for it if you request to withdraw. Right. So
And I'm
if
saying that there wasn't any request to withdraw. I only saw that it was it was an amount X, and then the following day it has gone down to amount Y. And I'm not talking with regards to treasury bills. I'm talking about the I don't know how you call it. You get me? So the amounts that showed on the dashboard reduced the following day, right? There was no request to withdraw.
So like I said, every day we have to tell you what the market will take for your portfolio, so that should you want to take your money out, you know exactly how much you will get. If we don't do that, you won't know how much you're going to get. So it actually does not matter if you are planning to take your money out that day, because we are a liquid fund and we want you to know exactly how much you have should you need it that day. We have to go to the market on a daily basis and show to you, so that you have it in front of you, what your money is worth on that day. So when you do request to withdraw, there's no uncertainty and we can actually deliver it the following day. That's what has made this work so far.
Maybe just to chip in a bit. So when it comes to the actual mechanics of what happens, this is a fund that is marked to market. We could all attest to the fact that there were instances where at some point inflation shot up and the market will quickly adjust accordingly. I think last year has not been easy. So we realized that at some points in time where there is some of those sharp rise in inflation and as well as interest rates, the portfolio may maybe just for a day experience a shock. Then we'll probably employ tools to make sure that we beef up the return, right? Maybe through other repurchase agreements and further negotiations and improvement in interest rate that we get on our repos. Right. So yes, I understand the situation that maybe this is not something that I believe that happens over a long while. I believe, like Dora said, maybe a particular day you may see maybe a slight decline, maybe because on that particular day, the interest rate in the market has shot up. But being so good on our side, we're able to put in measures to make sure that we beef up our negotiations in terms of returns that we make on our repurchase agreements, just to make sure that we put investors in a comfortable zone. So, like Dora said, probably when you look at a return over, let's say, like a week, you realize maybe at a point maybe there was some sort of decline, but maybe over a period like a week, you realize that you are still better off. So once we are marking the portfolio to market, what it means is that we'll always be applying market prices to the valuation of the securities in the portfolio that we hold. So at some point where let's say we buy a security and we are holding, maybe to sell in a few days, before we sell, where there's some fluctuation in the price of the security, you may see it happen over a day, then we quickly sell it and employ other tools to beef up the returns of the portfolio. So yes, we may be seeing some of those one day sort of slight decline, but when you look at it over like a week or two or for some time, realize that you are still better off. And that is why you can attest to the fact that for some time now, despite that 1 or 2 day little shock that you experience as a portfolio, your returns still look quite decent, around 25-30% over the time that we have been able to progress in this trend. So I believe that is what Dora is trying to explain. I believe that satisfy what you want to.
Okay, so I think we'll probably move on to the next question, which I believe is in the chat button. After that, we'll come to Mr. Kwesikito. So the question is, what are the exact investment products that the fund invests in? So, Obed, if you can kindly take this one on? It's a very good question.
So the specific instrument that we invest in.
Correct. What are the exact products that the
so
fund is?
very well. I think so. We have clearly indicated it's a repurchase agreement. That is also another instrument or investment vehicle that is available to be employed by fund managers. So yes, you may not probably hear that we are investing in maybe a Dachi bond or a SLA bond or a 10-year bond or a 3-year bond. But we're actually using repurchase agreements, which, like they were indicated, has some underlying security, probably treasury bill, especially in these times. But the exposure is to a counterparty. And most of these counterparties that are quite liquid. So when it comes to you doing like maybe a 1-week repurchase agreement with the counterparty, looking at the credit analysis of that counterparty, the counterparty is highly liquid, and that's for sure you're going to get your cash back on the day of maturity of that repurchase agreement. So broadly or generally, this has been the key instrument that we have been using, especially in these difficult times. But I mean, before we got here, we were investing in some short-term Government of Ghana bonds, but based on our risk analysis, foreseeing the possibility of governments doing a debt exchange and the likelihood that there could be some restructuring, we were prudent enough to exit some of those earlier. That was way at the exception of the fund, which we switched to a different investment strategy when we realized that things could go bad, right? So yes, we have in terms of securities that we invest in, it has evolved from various kinds of securities, and we employ which security will be much safer and will put investors in a comfortable zone. Thank you.
All right. Thank you so much. So to recap, we exited our government positions at some point in September or August of last year. And essentially, since then, we've been doing the repurchase agreements, also known as repos. That's probably what you'll see on our fact sheets, which means that we get into an agreement with a bank, and it's a carefully selected bank, where they give us collateral in exchange for a short period of holding our cash at a rate, a pre-arranged or pre-agreed rate. At the end of that short period, a few days to a week, you get your cash back with your interest, and we return their collateral. And I think that's what Ubed is saying, that at this point in time, the only collateral that we are considering is treasury bills that are very close to maturity. So that's generally what the repurchase agreement is about. Okay, so Mr. Kito, if you can hear me, kindly ask your question. Sorry, it seems Mr. Kito left the meeting. So maybe Jerome, if you have a question, kindly go ahead. Hi, Jerome. If you can hear me, kindly unmute yourself and ask your question. Okay. Jerome, last call. Otherwise, we may have to move on.
Hello.
Oh, yes. Hey.
Sorry, I wasn't seeing the unmute button. Yes, I want to ask, since we are, I think on the 16th will be the deadline for the debt exchange. And then from there, new securities will be issued, which the government is saying will be more liquid. I want to know, after the debt exchange is completed, is it likely you will take positions in the new bonds issued, or you will maintain this current strategy of repos? Thank you.
Thank you, sir. Obed?
Yeah, so I think somewhere along my presentation, I did indicate that once all this debt exchange is done and dusted, we'll revise our strategy. As it stands now, the clarity, there's no much clarity in terms of this debt exchange because there's so much happening that we all know. And for that fact, we know that there's some level of uncertainty. So, I mean, what I can say now is that yes, there'll be a revision of the strategy, but this is not something that we can talk about now. What we can clearly indicate is that we'll continue to keep on with the strategy that we have employed currently. But the assurance is that once the debt changing is done, yes, we'll revise our strategy that will beef up the returns on the portfolio. Thank you.
Thank you very much. So maybe if we can jump to Kwesi and then we can go to Prince Asamoah. So Kwesi, please, if you can unmute yourself and ask. Hi, Kwesi. Are you able to unmute yourself? You can also put your question in the chat box, the in-call messages if you're having problems with the mute button. All right, so Prince Asamoah, kindly.
Can you hear me now?
Yes, we can hear.
Sorry.
Oh, wait a minute. Okay, that's Kwesi. Okay, yes,
Okay.
Kwesi, please, we can hear you.
Yeah, that's Kwesi. Okay, I have a simple question. I want to know the factors that could bring negative return to the fund. That is all I want to know. And the follow-up is that have you mitigated those risks? That's all I want to know. So what are the factors that will bring negative returns to the fund?
Okay, so if I heard correctly,
That's my first.
right, the factors that will bring negative returns to the fund, and how we are managing those risks, right? All right.
Yes.
Yeah, great. Thank you so much. So Obed, if you can kindly help us with that.
Yes, so for a fund that is mainly fixed income, the risk here is interest rate risk because interest rate movement has effect on the price of the portfolio, the price of the securities in the portfolio. So where you have interest rates going up, it means that if you bought a particular security a month ago at, let's say, 30% at a price of, let's say, 100, when the interest rate moves to, let's say, 40 on that same or similar security, it's likely that the price of 100 will probably fall to like 80. So in that essence, you realize that the price of the entire portfolio or the fund will go down, and that will lead to a negative return. But the good story here is that we have done our best to make sure that we do not directly expose the investment that we have done to this interest rate risk. And what we have done is to make sure that we already have predetermined or agreed upon redemption rate or maturity rate or a sellback rate. So with this repo that we are talking about, you go in at a certain price and you are assured at what price you are going to exit and the amount of return that you will have. So broadly, interest rate risk is the big issue here, as well as default. Whenever there's a default, it means that you're likely to see some negative returns. So by employing the repurchase agreement, we have taken care of these two issues, especially given the conversation on government debt exchange and the likelihood of its negative impact and all that. So the repurchase agreement tool that we are currently using offers that sort of protection.
Okay, thank you so much, Obed, for that response. I think that answers the question. So, Mr. Prince Osu, if you could kindly go ahead.
I hope you can hear me.
Yes, sir.
Right, thank you for the opportunity. I think before I move on to my question, I'd like to also use the opportunity to thank the effort of the fund managers. I mean, right from the inception of this fund, we could see phenomenal returns and then how swift they were in their efforts to offload government securities and then move into repos. I mean, it's quite interesting. Okay, so my questions are for the fund managers. I would want to know the percentage of their personal portfolio that's invested in the fund. So then I demand yes or no answer. Then if yes, I would want to know why you have this percentage of your personal portfolio in the fund. And then if no, why you don't have any of your personal portfolio in fund. Thank you.
Thank you so much, sir. I'm not sure if it would be very easy to say the percentage of your personal portfolio, because some people may own real assets which will, influence how much cash, how much, the percentage of cash in their portfolio, is. So, for example, if you own a house and you have, 15,000 CDs of cash in your account, it might
Right.
look small.
Dora, I think the best option should be okay, yes or no. Yes, I have
Sure.
have some portion in the portfolio and why, and then no,
Sure.
I don't. Why?
Sure. So let me kickstart that. So and I'll call on, I see people. I'll call on some of you randomly. So get ready. So I'll set the example. So yes, I do have a good amount of my cash in the portfolio. Why? It's better than my bank account. As a simple answer. So I can move on to maybe Herbert. We haven't heard from you in a minute.
Yeah, hi Dora. Yeah, so I do have some funds in IC Liquidity. I think the initiative was a collective one, mainly to put some skin in the game and also put our money where our mouth is, just so that we are not detached from what we are doing concerning the fund. So we are in this together, and so whatever happens to the fund affects us as well, and that has sort of influenced how we've also managed the fund and made sure that we've taken the prudent decisions that is keeping the fund up and running and safe from the impact of all of the debt exchange issues that are currently happening. So yes, almost the entire team has some funds invested in IC Liquidity.
Got it. So, Augustine, since you're asking for clarification, let's pick on you. Augustine Animal, compliance head at IC.
Okay, thank you, Dora. I was asking the question because it wasn't so clear as to whether he was referring to the fund manager as an entity or the individuals. Now, I think the previous speaker has already stated it. As a fund, the fund manager itself, the fund manager has a high percentage of investment within the fund, and as individual staff, we are all encouraged to also do so. I mean, the thing is, you cannot tell people to be investing in your fund when you yourself you're running away from it. So yes, we have a significant amount of investment within the fund, and it also explains the reason why we ensure that the fund makes adequate returns that needs to be made without exposing to significant risk. Thanks, Zora.
Thank you. So, per Augustine, the fund manager, as in the company itself, does have some money in the fund. This is required by law and also because we have to manage our cash. So our treasury team places some money in the fund as and when they need to put cash away for a later date. Okay, great. So maybe I can move to Kojo Adi. what is the outlook for the short term based on the strategy being employed? So maybe Herbert, I can come back to you on this one. What is the outlook for the short term based on the strategy being employed?
Okay, so outlook for the fund, I think we've highlighted that we don't expect to see the high returns that we've seen over the last 3 or 4 months, and this is again based on up to when we have some clarity on the nature and form of the exchange program. So our strategy is still to be extremely defensive, using repos to manage liquidity and also generate decent returns. But that would mean that in the long run, as to how long this persists, then the returns on the fund should dip from the highs of 30 plus levels. So in the short immediate term, that's the outlook in terms of returns. And if nothing changes materially, then we are going to continue using repos to manage liquidity and then also generate returns on the fund.
Got it. Thank you. So I mean, at this time, I think we may have exhausted the questions. I'm just double checking. But please, if anybody has 1 or 2 more questions, we have a few more, at least 10 more minutes. We'll be happy to answer them. Okay, so we have Mr. Ebenezer Boahin. Can you go ahead, sir? Please, you'll have to unmute yourself. There's a button with a mic.
Hello.
Yes. Good afternoon. Please, we can hear you.
Okay. Please, my question is I don't really know about IC, so if you can give me a little bit background about IC. I'm joining. I just joined. I don't invest with IC, but I want to know more about IC.
Okay.
Thank you.
Sure. Okay. So IC is a IC is a an investment company. IC Asset Managers Ghana Limited is a fund manager licensed by the SEC, and we are also licensed by NPRA to manage pensions. So IC Asset Managers has been in existence since, I believe, 2011 or 2010. And IC Securities has been around for 22 years. I think this is our 22nd year. So we've been in the security space in Ghana for quite an appreciable period of time. We manage pension funds for a lot of the larger trustees. So you name them: Enterprise, Petra, Axis, and so on. We do a lot of securities brokerage on the sales and trading side. And we also do investment banking. The IC Liquidity Fund is currently our only mutual fund. It is managed by the IC Asset Managers team. And we started the fund at the beginning of last year. So far, so good. Yeah. Trying to, as much as we are trying to grow the fund, we're also trying to educate our investors. And so we do these forums once a quarter. I think this is our 3rd one so far. So hopefully in another 3 months, we'll have another such investor forum. But please feel free to review our website, www.ic.africa. It has a lot of information on our history, the deals we've taken part in, our management.
All right, thank you very much. But is it different from IC Securities?
We are
IC.
we are related. So IC Securities is a sister company to IC Asset Manager. We have the same management at the top level.
Oh, okay. So you're under the same umbrella. Okay.
Correct. We're under the same umbrella. Yes, sir. Thank you. So to Mr. Ebenezer Guma, will the recording be available by any chance? Yes, we hope to make the recording available online next week. So kindly give us a few days next week and we'll send out a notice once we've been able to post it online for you. I'm sure we will probably do it to our YouTube channel. Okay, so if we've exhausted all the questions, okay, Mr. Kwekubidi, kindly go ahead. Mr. Kwekubidi, kindly unmute yourself and then we'll be able to hear you.
Is that okay now?
Yes, sir, we can hear you loud and clear.
Okay, good. Good afternoon to everyone. I just want to know the current share price of the fund. How much is it?
That's an excellent question. I will have to look it up. It's on the IC website. 1 second. I have yesterday's price, which was 1.2278. Today's price, however, is 1.2283.
Oh, okay. Okay.
Mm-hmm.
Very well. Thank you very much.
Thank you, sir. All right. So as always, our doors are, so to speak, are always open. Our offices are in North Ridge in Accra, opposite Alisa Hotel. We also have a presence online. Our website is a landing spot where you can get, you can interact with us by live chat. We also have our phone numbers listed on the website and our WhatsApp line as well. So you can reach us in person, WhatsApp, phone, live chats, and obviously always by email at clientservice@ic.africa. If you have any specific questions on your account, or if you're a potential investor and you have any specific questions that you'd like us to touch on, we'll be happy to reach you or to engage with you that way. We would also be happy to meet you in person at your convenience to figure out what works best for you as well. So I think with that, I will hand over to Isaac Boama, our CIO, for final thoughts. So Isaac, over to you.
Hi, Dora, thank you so much. And thanks for having me on the call. I guess my colleagues have basically said everything. On behalf of the team, we want to say thank you for trusting us to manage your money for you. And we don't take it for granted at all. It's a very difficult period that we are all in. And so we appreciate the fact that you still trust us with your money. Just to recap a few things that was said earlier on. For the liquidity fund, there are three main pillars that revolves around our investing thinking. The first pillar is safety. The first pillar is liquidity. The second pillar is safety. The third pillar is return. Now, last year, the average inflation was about 32. And last year, our return matched the average inflation. If you pick inflation from January to December and you find the average, you're somewhere around 30, 32 thereabout. So last year, our main priority was protecting the real value for you. This year, especially within the first 3 months, given the debt exchange program and the uncertainty surrounding it, our first priority for you is liquidity. As people will say, cash is king. So we have to really focus on making sure that there's enough cash for you so that in case things go haywire and you need your money, you can have access to it. Given that the focus is on liquidity for the first 3 or 4 months, that means that return will slide a bit in terms of declining, just merely because there's a point where you chase after return, there's a point where you just protect what you have. I think at this moment, everyone on this call will agree that protecting what you have is more important than chasing 5 bears in the bush. So bear with us as we focus more on protecting what you have for you, whilst getting a decent return on your portfolio rather than chasing returns. And so bear with us as we go through this process. For all individuals that may be affected by the debt exchange program, I guess what you can say is the best of luck, and hopefully we'll come through this less scathed than what we are finding at this. Sorry for whatever turmoil you may be going through personally if you've invested in any of these government of Ghana securities and you're having to bear the brunt of the uncertainties. We do apologize for what's going on. But let's keep faith, and hopefully we'll have a market after the first 3 months of this year. Thank you very much.